Welcome to the Retirement Made Easy podcast. I'm your host, Greg Gonzalez. My goal for the podcast is to help you live a better life in retirement by giving you the tools and information you need in a language that you can understand. I truly hope that the information and wisdom we share on this podcast will be a blessing for you in your life. You can do a Google search on the internet and you can find a lot of information, but you don't get the wisdom. The wisdom comes from someone that's been in the trenches day in and day out for over a decade. Just like my mechanic. My mechanic has been in business for almost 20 years for himself, and the guy has developed this wisdom that he knows my car inside and out because he's seen it before. He's probably worked on dozens and dozens of vehicles just like mine, and there's nothing I can really stump him with. And that just comes from years of experience developing that wisdom. He should have his own podcast when it comes to cars. He's awesome. There's an expression that I love. It says, knowledge is knowing that a tomato is actually a fruit, but wisdom is knowing not to put a tomato in a fruit salad. So I've been doing this. I've been doing retirement planning with people for, like I said, over a decade. So I've seen so many different things. I've seen people retire. I've seen where they've made mistakes. And that's why I created the podcast, is I've seen what works and kind of what doesn't. And hopefully I'm able to share through this podcast a lot of the wisdom that I've gained from the years of experience. It's not that I'm better than anybody. It's just like my mechanic that just has all of that years and years of experience, and that turns into wisdom. And that's what I hope to share on this podcast. I work with people 50 and older as they plan for a successful retirement. And just like a fishing guide is there to help you get the results that you're looking for. But that fishing guide is there because he's fished for years and years and years, and he has the wisdom and the experience that it takes to get the results. So hopefully there's some takeaways on this podcast. You can gain some of the wisdom that has taken me literally years and years and years to develop. And hopefully you can use that wisdom for your advantage. On today's episode, since the market volatility just seems to be the popular topic, and I'm getting questions through the website. Our website's retirementmadeeasypodcast.com. That's where listeners submit all their questions. And one question this week, somebody submitted saying that investing in the stock market is like investing or gambling at a casino. What's my response to that? What a very interesting question. So we're going to talk about that on today's episode of the Retirement Made Easy podcast. But before we do, I wanted to remind listeners, check out our website, retirementmadeeasypodcast.com. There I have a lot of free resources that will help you as you plan for your retirement. Our 2020 tax planning guide just got uploaded and it's available for free, as are all the other resources we make available. And one other free offer that I wanted to mention that's right there on the website is what we call our pre-retirement assessment. And what that means is for the people that are a couple years out for retirement, they want to see if they're on track. Do they have enough saved? Do they have the resources to be able to retire this year or next year, or maybe it's the year after? And if they're not on track for retirement when they want to retire, well, what are some things they can do to improve their odds to get them back on track? What gaps do we see that we can fill in between now and when you want to retire? So this pre-retirement assessment is what we call it, is available to only our listeners of the podcast, where we can give you our personalized professional opinion on where you stand when it comes to your retirement planning. We kind of book these a month out, and we just have one spot available for March. So sign up for that if you're interested right there on the website. It explains everything. Now let's jump into today's episode of the Retirement Made Easy podcast. It was a question from a listener that submitted. All I have is a first name, Rachel. Rachel asked, what are my thoughts on investing in a stock market environment like this? To her, it seems more like it's gambling at a casino. So I did a lot of research on this. So this will be a very interesting episode, one of the most interesting episodes we've ever done. But yeah, this stock market so far this year in 2022 is extremely volatile. Between the war with Russia and Ukraine going on, we have 10 million jobs that companies and organizations cannot fill across the country. It's a labor shortage. We have a supply chain issue. For example, if you're looking to buy a vehicle right now, it's a terrible time to buy a used vehicle or a new vehicle. A lot of the used prices for vehicles are higher than the new vehicles. Inflation is super high, the highest since the 1980s. And all of these factors is causing the market to be as volatile as it is this year. So yeah, short term, yes, the market is very volatile, but we don't invest for the short term. We invest for the long term, or at least that's what I recommend as a retirement planner. We want to focus our long-term investments on your long-term goals. I don't believe in day trading. Day trading is kind of a gambling proposition, and I don't recommend that anybody tries to time the market or day trades or does options or any of that. I have had more people and heard more people lose their shirt trying to do options and day trading and this kind of stuff. That's not investing. That's kind of gambling. And maybe that's what Rachel had mentioned in her question. But as far as long-term investing and how long-term investing compares to going to a casino and gambling, that's a whole separate question. And that's where I did my research. So Bloomberg had an article that was released 12/31 of 20 that was comparing stock market investing with casino gambling. And according to this article, again, this is in Bloomberg, the odds of winning at various casino games, it did all the research, and it said with slots, you have a 40% chance of winning at a slot machine. Roulette, 44.7%. Blackjack, 48%. Craps, 48.6%. Poker, 46.6%. Keno was the lowest, 23%. So that's just one game. Those are the odds. And notice they were all under 50%. And what's interesting about that is that the casino knows that the more you play, the lower your odds become. That's why they have free refreshments and all these different things, because the longer they can keep you there, the more the odds go to the house or the casino. Then this study wanted to look at the stock market. And by the stock market, it looked at the Dow Jones Industrial Average, which they looked at the time frame 1901 to 2020. So you got about 120 years there. And they looked at, okay, if you were invested in 1 year rolling periods during that 120 years, so 120 different time frames, essentially, if you had just left your money in the Dow Jones Industrial Average for the entire year, what were your odds of making money during that 12-month period? And it's 74.2% if you just left it alone for 12 months. Now, again, with the casino, the more you play, the lower your odds. The more the odds go to the casino, to the house. It's the opposite with the stock market. The longer you stay invested and let time work for you, the higher your odds of success. So what this study did, this Bloomberg study, looked at, okay, what about 3-year? What about rolling 3-year periods where during, between 1901 and 2020, if you just left the money in the Dow Jones Industrial Average, and I'm not recommending somebody invest all their life savings in the Dow Jones Industrial Average. It's just an index, and we needed something to look at. So for rolling 3-year periods, your odds of making money were 86.5%. What about rolling 5-year periods? This study found someone that left their money in the Dow Jones Industrial Average for 5 years had a 90% chance of making money during that 5-year period. If they left it in there another 5 years, for 10 years total, they had a 97% chance of making money during that period. If they increased it another 5 years, for a 15-year wait, letting their money grow in the Dow Jones Industrial Average, they had a 99.9% chance of making money. So what this study shows us is the longer we can stay invested, the higher our odds of success. And also, the longer you play casino games, the lower your odds of success. And again, I will restate, not that it needs to be restated, but the Dow Jones Industrial Average is the 30 largest US companies. You probably wouldn't want to have all your eggs in just the Dow Jones Industrial Average. But again, this is for illustration purposes only, just to show you that investing is not the same as gambling. Investing is meant to be long term, whereas gambling is a short term. It's for, I guess, entertainment if that's fun for you. And I know there's many people out there that they're not clients of mine, but they have this tendency to dive in and dive out of the market, right? When the market's hitting all-time highs, they're diving in. When the market starts to correct and start to go down, then they're diving out. So they're forgetting that investing is a long-term affair, and they're trying to make it a short-term affair. And they're punishing themselves because no one can successfully time the market, but they forget that. And they want to dive in and dive out because they're so short-term focused and they lose sight of their long-term goals. It's kind of like the people that buy a new car every year or every 2 years. And they're always driving the brand new 2022 or 2023. Then they'll wait a year or two and, oh, this new one came out. And it's really hard to build wealth if you're constantly buying a brand new car every year. But there's a lot of people that do it. They drive it for a year or two, then they take all the depreciation on that vehicle and eat it up front, and then they trade it in for the next brand new thing. Whereas Dave Ramsey would tell you, if your net worth isn't $1 million, you should never buy a brand new vehicle. You should buy a couple-year-old vehicle and pay cash for it and let the first owner eat all that depreciation. There was a neat study that was done by Bloomberg at the end of 2020, 12/31/2020. And what it looked at was the 500 largest companies in the United States, which we call the S&P 500. And it looked at the performance of those companies, their earnings as a whole, and how they tended to go up. The long-term trend of the earnings of these 500 companies was up. It was up and up over time. Now, there were some down years, but then it looked at the S&P 500 stock market index. And what it showed was there was a 97% correlation, meaning the stock market index is driven by the earnings of these 500 companies. And that just makes sense. The better the companies, the more profitable, the higher their earnings over time, the better the stock market index is going to do. So what drives the performance of all these stock markets? It's the company earnings behind them. That's what it is. There's all these different things that make it dip and dive, but it's the earnings that really drive the path of the market index. So the higher the earnings of McDonald's and Coca-Cola and Apple and IBM, Procter & Gamble, ExxonMobil, Boeing, General Electric, the more those earnings rise and rise and rise and rise, remember that there's a 97% correlation between the earnings of those companies and how the S&P 500 index performs. So I think successful investing over the long haul, it involves tuning out the white noise and having an optimistic outlook for the future, which certainly can be hard. It can be very difficult at times, but let's just look back. Let's look back to 1950 and how things have changed for the better. There's an article that was called "It's Getting Better All the Time, 100 Greatest Trends of the Last 100 Years" by Stephen Moore and Julian Simon. And the article compared the 1950s to current day America. But in the 1950s, the average life expectancy was 68 years. Today, for someone born, it's 78 years. In the 1950s, 50% of seniors were in poverty. Only 9% of seniors are in poverty today. In the 1950s, the high school graduation was 41%. The college graduation was 8%. Today, we have an 88% high school graduation rate and a 31% college graduation rate. In the 1950s, no one had air conditioning. No one had home computers. 10% had televisions, 10% of households. Home ownership across the country was 55%. And of those homes, the average size of the home was 983 square feet. Today, 80% of Americans are homeowners. The average square feet is 2,348 square feet, 95% own televisions, 90% have air conditioning, 75% have home computers. This is the greatest country in the world, and I have to think that in another 70 years, things will be even better than they are today. So what did we learn today? Well, we learned a couple different things. Number one, if you're going to invest for the long term. The longer you can invest, the higher your odds of success statistically. Let time work for you. Don't try to time the market. Investing is the opposite of casino games. With casino games, the longer you play, the lower your odds become. With investing, the longer you invest, the higher your odds of making money go. So if history is any guide, and I will argue it's the only guide we have, you should be a long-term investor, not a day trader. This was more of a fun episode because it was a very intriguing question that a listener had submitted to the podcast. If you have questions, submit your question at retirementmadeeasypodcast.com. That's retirementmadeeasypodcast.com. At the bottom, it'll say Ask Greg a Question. I promise I look at all questions, and some of them I even use for the podcast. I hope this episode of the Retirement Made Easy podcast has been helpful. And remember, always dream big. The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, please consult your attorney, tax advisor, or financial advisor prior to investing. This is a hypothetical example and is not representative of any specific investment. Your results may vary. All performance referenced is historical and is no guarantee of future results. All indices mentioned are unmanaged and may not be invested into directly. The SmartVestor program is a directory of investment professionals. Neither Dave Ramsey nor SmartVestor are affiliates of St. Louis Retirement Advisors or LPL Financial. There is no guarantee that a diversified portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not protect against market risk. All investing involves risk, including loss of principal. No strategy assures success or protects against loss. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA, SIPC.